For months, markets were told one story. I would justify any valuation, any spending, any promise. Data centers, chips, cloud contracts, and endless future revenue projections pushed tech stocks to extremes. But now the cracks are showing and the AI bubble may finally be popping. This time, the warning shot didn't come from a small startup or an obscure analyst. It came from Oracle. Oracle's latest signals rattled the market because they exposed something investors have been ignoring. AI demand is not translating into clean, profitable growth the way the hype suggested. Massive capital spending, thin margins, uncertain customer payback, and growing competitive pressure are colliding at the same time. The AI trade was built on a simple assumption. Spend now, profits later, but later keeps moving further away. Cloud providers and enterprise software firms are pouring billions into AI infrastructure, data centers, GPUs, energy, cooling, and networking. The costs are immediate, the returns are vague, and customers are increasingly cautious. Enterprises want AI, but they want it cheap, efficient, and measurable. That's a problem when the cost structure is anything but. Oracle matters here because it sits at the intersection of cloud, enterprise, and AI monetization. When a company like Oracle shows stress or hesitation, it tells the market that AI adoption is becoming harder to convert into predictable revenue. This isn't about whether AI works. It's about whether AI pays. And markets are starting to ask the uncomfortable question: what if AI is transformative, but not massively profitable for everyone involved? That's how bubbles pop, not when the technology fails, but when the financial math stops adding up. The Nasdaq has been priced for perfection. AI stocks have been priced for domination. Any sign of slowing demand, margin pressure, or delayed profitability forces a reassessment. When expectations are extreme, reality doesn't have to be terrible, it just has to be less amazing than promised. This is why the reaction matters. Investors are beginning to realize that AI is not immune to economic gravity. High interest rates, tighter liquidity, rising energy costs, and capital discipline all matter again. You can't burn unlimited cash forever and call it the future. Oracle's moment is important because it breaks the spell. Once one major player shows strain, investors start looking sideways at everyone else. Cloud, chips, data centers, enterprise software. The entire AI ecosystem is interconnected. And once sentiment turns, it turns fast. This doesn't mean AI disappears. It doesn't mean the technology isn't real. It means the valuation bubble, the idea that AI justifies any price, any loss, any assumption, is finally deflating. We've seen this movie before. .com. Clean tech, crypto. Revolutionary ideas don't prevent bubbles. They often create them. The AI bubble isn't popping because AI failed. It's popping because markets overpaid for the dream. Oracle may not be the end of the story, but it looks very much like the beginning of the reckoning.